What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. And this week, we had earnings from Netflix. We had earnings from Tesla. This upcoming week is even bigger. We've got earnings from Meta, Amazon, Google, and Microsoft. So buckle up, folks. We are on earnings eve for the vast majority of these stocks. We better kick things off like we always do with Meta Platforms, which started the week closer to $219 per share. Finished the week down about 3%. Finished the week closer to $212 per share. Are we cutting and pasting press releases over here on the Investor Channel? No. Meta is reportedly ready to move on another round of job cuts. This coming in the form of a rumor just a couple of days ago. Wouldn't surprise me if we get more clarity on this either on earnings day, which for Meta happens on April 26th. Just 5 days from now, we'll be getting earnings from Meta. Maybe we'll get a little bit more clarity after the company reported we could see another 10,000 jobs being cut over at Meta. This is to follow about 11,000 jobs that were cut just several months ago. Now, this didn't come in the form of a press release, but I was watching some AI videos, doing just some broad research on the topic, and somebody was talking about Meta's kind of generative AI product that they have that they call Dino, or D-I-N-O. And what this example that they give here basically has a picture of a dog, and then it is able to essentially identify where the dog's eye are, and then it can pull up other pictures and essentially identify where a dog's eye is. This is actually one of the least impressive examples that I saw of this. I saw examples where you could be walking in a kitchen and it could show you there's a stove. The stove is hot. Here's a fork. Here's some tongs. And so on its surface, doesn't seem that impressive, but from an augmented reality perspective, and certainly if you apply this to robotics, from a human perspective, we can all look at a dog pretty much and know what the eye is and what the ear is. But if we can start to train robots to make these types of decisions, that obviously has wide implications and wide applications. I was impressed with Meta's presentation of this, and I'm really excited to see more of what they have coming down to the pike. I've always said it with Meta that this is one of the companies, the metaverse, I think, is a joke. It could end up being an extension of artificial intelligence, but from an artificial intelligence perspective, I actually think Meta could absolutely be in the conversation with Microsoft, Google, and potentially Amazon as well when it comes to a leading company in that space. Moving on to Apple. Now, we are not getting Apple earnings next week. They tend to all fall in the same week. Apple delaying those about a week. We will get those on May 4th. Apple started the week at 165, roughly flat. Finished the week at 165. Apple's largest chip supplier, Taiwan Semiconductor Manufacturer, otherwise known as ticker symbol TSM, initially popped on earnings that included kind of a downcast outlook on the sector and seemed to show demand maybe waning just a bit. We are seeing today TSM down 4.4%. Obviously, as TSM goes a little bit, Apple goes. Now, the company may be tripling its investment in the country of India. This is according to the deputy technology minister in that country. It should come as no surprise that Apple and basically all of these companies will be rapidly expanding into that country. Apple could better monetize its base if Bing becomes the default search engine. This is according to B of A. Obviously, whenever that default search engine contract comes up for grabs over at Apple, they'll be knocking on the door of both Microsoft and Google to see which one wants to pay multi-billion dollars. Now, the interesting thing about that contract is, so when you're using the default search engine on Apple and you click on an ad, Apple not only gets kind of a one-time fee or a one-time charge to be the default search engine from Google, but Google actually does a revenue sharing with Apple on those ads as well. So the interesting take could be that Bing comes in there and pays a much higher fee, but the risk is users change over to Google, make that the default search engine, and Apple doesn't get any of the residual on those ad clicks. We'll see what happens there. Now, Apple Card launches with a 4.5% yield savings account with Goldman Sachs kind of leading the way. I actually signed up for this. So you need the newest software, you need an Apple Wallet, you need the Apple Cash, maybe you need the Apple Credit Card. I have the Apple Credit Card, Apple Wallet, all those types of things. And I was able to put my Apple Cash, which was kind of stacked up, just hadn't been using. Now I put this into a savings account, which literally took me 30, 40 seconds to set up. Now that's earning over 4% yield. I didn't have a high yield savings account as Schwab is not offering that product. And so I moved some of my money that was just sitting in kind of a checking account into this high yield savings account. We'll see the traction of this going forward. Moving on to Amazon, start of the week at 103, up over 3.2% to finish the week very close to $107 per share. Now, we will be getting earnings from Amazon just 6 days from now on April 27th. Now, Microsoft Azure may have the lead in generative AI, but AWS is not far behind. This is according to Baird. Most of the research that I am seeing is pointing to this and is pointing to Amazon still holding a large share of the AI startups and a lot of applications that could be run still on AWS. The other thing to think about with Microsoft is because they have such a big investment into ChatGPT, that if you run a large language model, do you really want it to be running on Azure or essentially a competitor, or will you take that over to Amazon? So Amazon, while not altogether neutral when it comes to AI, as they have Alexa and some other things, could be seen as kind of the neutral provider here and could attract some business in that sense. Now, Amazon stock rose on the signs of positive Q1 sales. This is all just based on rumors and data checks pointing to the fact that the company's e-commerce business might have had a decent quarter. Now, Amazon's earnings, which again are on April 27th, will include a focus on the job cuts that the company has been executing over the past couple of months, macro pressures, and chip development. A lot of people don't realize that Amazon actually has some very advanced chip technology from the server side. They have some advanced chips when it comes to training these large language models as well. I think the only piece from Amazon is they are not marketing this to investors very well. And so a lot of investors don't necessarily understand the value that could potentially be unlocked in the future when it comes to these things. Now, UK regulators start the probe of Amazon's iRobot acquisition. That was obviously about a $1 billion deal that was announced several months ago, and it is for essentially a robot maker of vacuums and other technology that I think Amazon finds useful. Moving on to Google, start of the week at 104, up just fractionally, up, finish the week close to 105. We'll be hearing from Google on April 25th, just 4 days from now. Now, Google's California mega campus in San Jose, California appears to be slowing to a halt, if not outright canceled, based on economic challenges. The company is going to be taking about a $500 million accounting charge and perhaps more in the future related to office space reductions. The project was approved in 2021 and was set to bring over 7.3 million square feet of office space, including new housing units, which they probably still should build those. The lead project developer has already laid off 67 employees just based on, I'm only maybe an hour and change from here, depending on traffic. Yeah, the economy is not great here in California. Some of that has to do with the political environment. And if these things don't change, then these mega projects that have a large economic impact will just stay grounded. A lot of the discussions on that mega campus came, I almost viewed this almost as a pre-announcement from Google. Again, they report their earnings about 4 days from now, but the CFOs and the lead executives already have a grasp on those numbers. And they talked about workforce cuts. They talked about the accounting based on that and how 1.9 to 2.3 billion of that of severance costs, some of that is going to fall in one quarter, some of it's going to fall in another quarter. They talked about the office space reductions. They talked about different type of depreciation expenses. This is getting out in front of earnings. This is nitty-gritty type stuff, but this is stuff analysts put into their models and put into their estimates. And I just thought it was interesting that Alphabet jumped in front of that this week. Doesn't make me wildly confident that the numbers are going to be great. But again, it's less about the numbers when it comes to Google in this quarter. It's more about the outlook. It's more about the hype, if you will, about AI as well. Now, Google said to be using generative AI in its ad business for, quote, sophisticated campaigns. Now, if you already use Google AdWords and you generate ads and you are using the company's back end to manage a lot of your ad campaigns, there's a lot of artificial intelligence already there. But some things that the company can do is enhance these campaigns, like maybe changing the image based on who's viewing it. Obviously, if you are setting up your ad campaign, maybe you have like a picture of a dog or something for dog food in your campaign. What Google is going to be able to do is maybe alter that picture of that dog to depending on the user that is looking at it. Maybe you can make it a large dog or a small dog or a happy dog or a sad dog, depending on the ad request and those types of things. Just a lot of progress going to be here. I think the question, though, that we have to have with Google is how much will AI add to the ad business and add to their business, but at the same time cannibalize or take away from traditional search? Because again, I have Bard as a tab opened on my phone, and I've actually been going to that more than making traditional Google searches. And so while AI might become more useful, how Google is able to monetize it is the big question mark. And it also is a question mark for Microsoft as well. And it's a question we won't find answers to probably for maybe several years. UK regulators are pleased with Google's offering to developers for different payment systems after a probe. So obviously this company, Google and Apple, are being pressured to offer different types of payment options for in-app purchases so they don't necessarily have to collect those, quote, 30% app tax on every transaction, and regulators putting pressure on these companies to at least give consumers options. Now, Google is reportedly launching its foldable phone sometime in June, pushing Samsung. I don't know how popular these foldable phones are. I'll be honest with you. The only time I've ever seen a foldable phone is in a TV commercial. It's not that I'm out in public all the time and looking at people's phones, but I've never seen somebody with one of these foldable phones. So I don't necessarily think this will move the needle unless people start desiring that device more than traditional phones. Moving on to Netflix, start of the week at $3.36, and after reporting their earnings, the stock sank over 2.5%, finished the week. We'll call that close to $328 per share. Now, the company did have a subscriber beat based on estimates, but its revenue did start to slow down in Q1, and the Q2 guidance was more or less underneath expectations as well for Netflix. But all in all, a decent quarter, and considering how much the stock has rallied really over the last year, the stock's up over 48%. The fact that it will likely have to take a breather over the next maybe several quarters is likely expected by some investors. Now, the company is exiting its iconic disc mailing business. If you're old enough to remember when this business got off the ground, then you're probably my age. Moving on to NVIDIA, start of the week at $267. Had an initial pop, but finished the week still up about 1.25%. This is on the heels. We got TSM earnings. We got ASML, which is like a lithography maker. We got a little bit of chip data out here. But I tell you what, NVIDIA is just humming along in its own airspace, up 1.2%, finished the week close to 271. Not a lot of news out of NVIDIA. We don't get their earnings for basically another month on May 24th. Moving over to Microsoft, start of the week at $290, down about 1 3/4%. Finished the week at $285 per share. Elon Musk says, quote, lawsuit time as it relates to Microsoft, as he alleges that Microsoft trained its AI models, quote, illegally using Twitter data, and Elon Musk is threatening a lawsuit. We'll see how that works out. Microsoft, seen as the largest AI share gainer in the coming years, largely based on its investment into OpenAI, the maker of ChatGPT. My only thoughts with it, and look, this could end up being reality, but oftentimes when it comes to investments, there's this analogy used in hockey where it's like, you want to kind of skate where the puck isn't. Right now, the puck is in Microsoft's corner. They have a whole team hovering around that puck. Everybody assumes this company is going to just massively print money and profits and gain market share when it comes to AI. The stock market and business doesn't always work like that. And it's how fast moving AI is moving and how these large language models, they're still in their infancy and they're still a little clunky. There's going to be a lot of these over the next 12 months. And so while I'm not saying we should sell Microsoft or we should go short Microsoft or anything like that, I am hesitant to think that, we're going to turn this $2.13 trillion company and we're going to somehow magically double this or even add 30-40% to that type of valuation. This company still, its bread and butter is selling subscriptions to software like Microsoft Word, Excel, and Outlook. And OpenAI and ChatGPT, one of the things it's likely to do is actually eliminate employees. And so if employees are being eliminated, that's a $5, $10 a month subscription charge that a business is licensing from Microsoft that it no longer needs. And so just similar to what we said about Google, these companies are going to make money in AI, but how much is it going to take away from their bread and butter businesses that they already have? In the case of Google, online advertising, in the case of Microsoft, licensing software. If there's less employees, there's likely less employees that need a license to use the software. These are the questions I have about these companies, and these are the questions that will be answered in the coming months ahead. Moving on to Tesla. Start of the week at 187. Woo! Skied down a ski slope, down over 12%. To finish the week closer to 165. Over the last year, the stock has not recovered. It is still down 50%, but year to date, still up 50%. If you like volatile stocks, needless to say, Tesla's your man. The company fell earlier in the week, obviously, as it reported earnings. They lowered their pricing. The margins from Tesla, the gross margins from the vehicle perspective, from a Tesla perspective, shriveled up. We had 19% gross margins a year ago, or operating margins off the top of my head, I can't remember. This year, now you're closer to 11%. This is still obviously far in excess of anything that you see in the automobile manufacturing space. Even the manufacturing space in general, like double-digit margins, is still relatively good, but it obviously is going to have some investors concerned about this stock, and it obviously brings into question how you're going to be able to expand the market cap and the multiple on a stock that still trades at like 40-50 times earnings. Those earnings likely coming under pressure as those margins look like they're not coming back anytime soon. Cathie Wood, though, wasn't hesitating to put a $2,000 price target on Tesla for 2027. That is just a couple of years away, driven largely by robo-taxis. Now, Elon Musk discussed this at length on the conference call, where he talked about the fact that he even said this, and this is not verbatim, but it's a very close quote to what Elon Musk said on the conference call. He said, we could sell Tesla cars, the Model Y, the Model S, the Model 3, and the Model X. He said we actually could sell them at break even, basically make no profit on them, with the idea that later on with autonomy, those cars can drive on their own and it unlocks all of this value. Elon Musk is convinced, and same with Cathie Wood, believes that the minute that Tesla is able to drive these cars without a physical human inside of them, that unlocks all of a sudden a ton of value. And I certainly would agree with that, but from a regulatory perspective, how close are we? Tesla has not gotten full approval for full self-driving with a person sitting behind the wheel. How far are we from getting regulatory approval, not just in one city in Arizona or one city out here in San Francisco or something like that, but we're talking about globally, or at least domestically here in North America or the United States. How far are we away from regulators allowing Teslas to drive around with nobody the inside. And how do we solve some of the issues with an electric car that only has a certain amount of range? How do we solve some of those issues as well, as that car needs to eventually be hooked up to a charger at some point? There's all kinds of hurdles that need to be crossed. Cathie Wood and maybe even Elon Musk believes those hurdles are likely to be crossed relatively soon, and she's predicting a $2,000 share price on Tesla, which would be more than a 10x. Now, what they also talked about on the conference call with Tesla is they literally have, and no other car maker has this, because almost every other car maker, other than some of the other startup EV stocks, is they manufacture their cars, they send them to a dealer, those cars sit on a lot, and it takes a while for Ford and GM to understand what the cars are selling for, what's the demand. Whereas Tesla sells all their cars first party. And so Tesla, every single day, the executive team gets an email. They get an email of how many cars were sold, and they get an email with how many cars were manufactured and delivered. And so every single day, the company can make adjustments to the pricing of the cars. And this is happening in real life with Ford and GM on the lots of dealers. Tesla just has the ability to do this on their own website. Now, they've been lowering the prices, but more recently, they just raised the prices, including today, by just a couple of percentage points on their high-end Model S and Model X cars. Let's move over to the technical segment of the show. The S&P 500 is just making a beautiful series of higher lows, higher highs. It hasn't been confirmed yet. A confirmation of higher highs would take us above really 4,200 on the S&P 500. And look, it could happen next week, guys. We have Meta on the 26th, Amazon on the 27th, and squeezed in between there, you have Google and Microsoft on the 25th. Those are, I mean, I'm not breaking any news here. Those are large enough companies in the S&P 500 to move this either up and confirm that we're still in this uptrend, or that it's starting to weaken and we drop down. But the thing to remember, guys, is for a year on the S&P 500, since dating back to April of last year, almost to the day, we are in essentially a 16% up or down trading range. If you cannot stomach stocks going up or down 16% over a 365-day period, there are people that manage your money for you. I would encourage you let them do the job, and you focus on your golf swing or something else. Moving over to Meta, it is still in this uptrend, but we saw a little bit of a breakdown, but it doesn't surprise me, okay? As you head into earnings, there's some indecision. Some people might not want to be caught offside with this stock one way or another, long or short. And for the stock to hesitate at this area, it is certainly trading at the top of a range. What is Meta going to have to announce on the 26th to get us to continue this uptrend and over? I mean, this stock back in November was $90 and now it's $212. I took my profits back at like 180 on this one, but we're going to be watching this closely after earnings. A push higher means we're probably filling this gap up here, and this gap is wide from 240 to 280, and it doesn't mean we're going to fill it. It means we have a much larger probability of filling this gap, and I would love to own this stock through this gap. The other thing that could happen is we have a pullback. There's area of support down here at 180. That's possible. It's only $20 or $30 lower. A deeper pullback than that would be very exciting. You fill this gap, you come back to this trend line here, which I'll change to maybe like an orange color. We get a pull back to there. I'm a little more excited, but obviously we'll see how those materialize into next week. I think Meta's earnings are going to be relatively good. They've done enough cost cuts and they have strengthened their business. It will really be the day before you get Google on the 25th. And depending on how Google goes, it could move Meta in advance of that. Now, moving on to Apple, which again, we don't get for basically 2 more weeks as this company reports their earnings on May 4th. It is setting up at the top, and it is decision time for Apple. Are we going to push and get higher than these highs? If you can get higher than 170, really more specifically more than 175, if you push higher than 175, all of a sudden that trend line, the higher highs are over. Now, it doesn't mean that we just rocket emoji to the sky. It means we will likely have some other pullback with Apple, as this stock is also very meta-like, have been on a hard rally. Back in January, this was 124, and now we've bolted on $40, and we're up here at 165. My guess is you're going to have a breather in this one. My guess at this current time is this technical pattern is going to hold. These are going to be the highs. You're going to have pullbacks in Apple and probably opportunities to add to it. Moving on to Amazon. This one's looking really, really, really good. In the shorter term, you're making higher highs. You're confirming these higher highs. We have Amazon reporting their earnings on the 27th, depending on, I don't necessarily think that the earnings are going to be that great for Amazon. I think they'll be good enough. I don't think we're going to all of a sudden see this huge profit from the e-commerce business. AWS will do what it does. It will really be about management commentary and how they sell all of the stuff that they've got going on Amazon. They've got to start storytelling over at Amazon a little bit better. And if they're able to do that, this is a stock that can continue to rally as a $1 trillion valuation on this company that has nearly $500 billion worth of revenue. Can be made sense of to a certain degree. Now, Netflix doesn't look bad. Look, after earnings, looked like it wanted to retest areas down here at about 300, but it's holding its ground. There's a lot of investors that have probably piled into this name more recently, and so they're not necessarily going to be a seller. Obviously, you have some accumulation of this stock at higher prices, but it's getting less and less by the day. A lot of people are either probably very close to break even on their Netflix investment, or obviously if they've gotten in early, they're still up tremendously, but you're either up in the shorter term or you're roughly break even on a stock like this, or you're looking to average in if you bought it at these elevated prices. Stock's holding its ground from a valuation perspective. It's not cheap, but it's not wildly overvalued as well. Now, speaking of wildly overvalued, we've got just a $670 billion market cap on a company that'll do, $25 billion in revenue this year. We'll see with NVIDIA, though. I tell you what, they can have a lot of market expansion. They have a lot of pricing power as well. We won't really get insight into that until the 24th, but you've got AMD and Intel in between there to where we'll see some stuff. Stock looks a little meta-like it wants to hesitate at these levels. Wouldn't be surprised if you get a pullback in NVIDIA. I tell you what, if you were an investor in NVIDIA, you're holding these shares, you actually want to see this thing take a breather at some point. The longer it goes on these stretches, at some point it doesn't meet expectations, and you can sometimes have a cascading effect there. Moving on to Google, looks similar to Amazon, making a beautiful series of higher lows. This one's at a high point, and looks like it just wants to set up here at 107. We've got earnings on the 25th, very similar to Amazon, really similar to almost all of these companies. It's going to be about management storytelling, and I don't have a lot of confidence in Sundar Pichai to tell a story. I have a lot of, I mean, as an individual, I have a lot of confidence in him, but to tell a story to investors, I don't have a lot of confidence in him. Same with Andy Jassy over at Amazon. I don't have a lot of confidence in him from a storytelling perspective. And that is what's needed likely with Google to really push these. Okay, minus results, which I just don't think are going to be there in the online advertising business. You are likely to see some share decline when it comes to search on a business that was already somewhat stagnant from a growth perspective. Just a tiny bit of search traffic going through ChatGPT, going through Bard, not clicking and viewing on ads, that's going to impact earnings over at Google. It's not going to allow them to expand. We've got all this price action between 105 up to about 120 that I think you're going to need a great story from management or very solid results. But here's from a technical perspective, you get a pullback in Google. From a technical perspective, it's just following the pattern. Any pullback south of, I would say, 100 on this one would be your buying opportunity. Moving over to Microsoft, similar to NVIDIA, similar to Apple, similar to Meta. This one is setting up at the top of a range, similar to Google as well. A pullback on this one south of 280 on their earnings on the 25th could actually potentially be a buying opportunity. This purple line I have in here is probably a little steep because this stock could pull back into like the 250s and still be in this uptrend. Probably could get even deeper than that. Some technical guys would say you wouldn't want to break these lows, but I think you probably could. Now the reverse is possible. Microsoft could be like, we're just crushing it right now, and we can make an NVIDIA-like move, retest these highs up over $300 per share. Obviously, anybody's guess right now with Microsoft. My guess, though, that's probably not likely. We're probably going to see pullbacks in this one as well. Moving over to Tesla, speaking of a pullback, we've created a gap in the price action from about 186 down to about 165. This one absolutely looks like it's rolled over, and here's some of the reasons why. The intermediate trend is lower highs. That dates back to 2021. The micro trend is essentially lower highs as well, but not all is lost because you have these lows all the way down here at 106. So as long as this stock finds some kind of footing before it gets to 106, it could stop at 130. It could get even shallower than that and get kind of into the 1-teens. Really wouldn't worry me from a technical perspective, but the intermediate trend is still down on this stock. The micro trend is essentially down as well. Accumulation in my portfolio comes south of, I would say, just off the top of my head, probably south of 130. I wouldn't want to get it before you get to about the middle of this box. Even with the lower margins and the lower profitability over at Tesla, what they are doing to the competition is likely going to be more beneficial for Tesla in the long run than detrimental. Guys, we are on the earnings eve. Meta on the 26th, Google, Microsoft on the 25th, and that is all followed by Amazon on the 27th. I hope you all have a wonderful weekend. Buckle up because we'll be here next week here on the channel to cover all of those earnings and more. I hope you all have a safe and happy weekend. We'll see you again next Friday. Until then, good luck with your investments.